Okay, hello traders and welcome out to the Market Watch Group Placing Your First Trade video series. My name is Scott Beck. I am the head trading coach here at the Market Watch Group. I will be your host for this fifth and second to last video in our six-part series. Today we are talking about managing the trade. Very excited. Pat yourself on the back. You've done great to get here, to put the right habits in place, to make sure that we, as we said earlier, dot the I's, cross the T's, tie up the loose ends, and make sure that we are competently executing trades. A quick recap. Video 1, the basics. Find a broker, get an account, get a paper account, be ready to trade. Video 2, pick a stock, start building a watch list. Video 3, after you've picked your stock, start setting up your trade. Triggers, stops, targets, timeframes, reward to risk, position size, all the due diligence that leads to the trade. Step 4, video 4, execution. We put the trade on. We automate the orders. We use stops and we use OCO orders to manage the trade as much as we can. Now what? Now we move to step 5, managing the trade. What does that mean? To manage the trade. That's what we want to talk about. Let's dive into that. First and foremost, as always, please remember, we're not advisors. We're not brokers. We don't give guidance. We don't give recommendations. This is for illustrative and educational purposes only. We're a group working collaboratively. We all take responsibility and ownership of our own trades. And with that in mind, let's talk about the agenda. First and foremost, how frequently should you monitor? What does that mean to manage a trade? Do you monitor it 7 times a day, 3 times a day, every hour, every minute? It depends. That's the answer. We'll tell you what it depends on. What are you monitoring for and how? Right? What are we looking for? We're looking for it to be right. We're looking for it to be wrong. A little bit of both. So we'll talk about the details of that. We'll talk about how you adjust your stop loss order. That's how you manage the risk in a trade. We'll talk about executing on your first take profit where you ease the pressure on the trade. How much should you take when it gets there? That also will change according to market conditions. We'll talk about selling at your target price. It accomplished the objectives. Great. How are we going to finish this trade? We'll talk about trail stops. We'll talk about stops that trail. These are mechanisms that we can use to manage the trade, to take risk out of the trade in an ongoing fashion. Those are very important to us. The more we can automate managing and closing trades, the more effective we're going to be as traders. That's very, very important. Lastly, be water, my friend. We adapt, we adjust. Conditions change, we adjust our plan. If we run out of gas, we don't keep trying to fly the plane, we land the plane. That's very important that you know and acknowledge when is it time to adjust the plan. And we're going to talk about how you can get more comfortable with that. That's the agenda. Without any more delay, let's dive into the platform and start talking about it. Okay, let's jump into it. We are nearing the end of this first series on placing a first trade, focusing on stocks. Part 5, managing the trade. What does that mean, managing the trade? Do we handhold it? Do we check it every minute, every hour, every day? What is the frequency? Let's start with that. How frequently to monitor the trade? What is the routine? Now, I'll tell you a simple rule that I use, and that is whatever the time frame of the chart. Now, you'll notice we have a daily chart. Whatever the time frame you use to make the entry decision, that's the frequency you should check it. So if it's a day trade, you're not going to be using a daily chart. You're using a 5-minute chart. So how often should you look? Every 5 minutes. Now, you might sometime do a momentum trade where you're only looking to be in it for just maybe a couple of days. One of these moves, not one of the bigger moves, right? And so you can kind of see these moves are a little bit different. Where you might sit through this, you're thinking, I want one of these. Okay, well, that's different. You might be using a 1-hour chart or a 2-hour chart. Well, then that's how often you need to look, every hour or every 2 hours. How frequently to monitor is determined before the trade, right? So what are we going to do? At least every day. Now, can you do it more? Yes. Should you do it way more? No. A couple times a day. Fantastic. Should you watch every 5 minutes? If I started this trade from this perspective, 6-month daily, should I come down here to the 5-day, 5-minute chart? This is not helpful. There's nothing here for you. This is just going to whip you up in a frenzy and give you tick fever. So make sure you're deliberate with how you determine how frequently to monitor. Now, what are you monitoring for? Remember, stage 1 of a trade is when we're doing our due diligence. Stage 2, we place the trade, now we're in. What are we looking for? One of two things. A, I'm looking for it to move into the momentum stage and it's doing what I thought. And that will make me happy. Or there's B, where it just sort of grinds along. It's not doing much of anything. And I'm not happy or sad. I'm just waiting. Or there is C. And C is it goes wrong. And we're sad. ABC. That's all we're looking for here in this beginning stage. If it's A, we're looking to say, hey, it's moved into the momentum stage. Great. Let's start tightening up our stop and let's let this thing go. If it's B, we're thinking, how long do I let it go sideways? 3 days? 4 at the most before I start to get nervous? What is C? C is when we're thinking to ourselves, how do I cut my losses short? If the trade goes wrong, can I see that it's going wrong before it goes max loss wrong? That's the difference. When you place a trade, you're going to put a stop loss. Just like when you get in your car, you're going to put your seatbelt on. But if you're driving your car down the road and you see a tree and you're heading to that tree, you're like, oh, I'm going to hit that tree. You don't think to yourself, oh, it's okay. I've got my seatbelt on. You think, oh, I'm going to jerk the wheel. I'm going to hit the brakes. I'm going to do whatever I can to avoid worst case scenario. But if worst case scenario happens, I've got my seatbelt on. That's what we're thinking, right? So we come into this trade, we have a seatbelt on, and we're watching. And if it goes sideways, we're like, okay, it's not great, but it's not wrong. We know trades hiccup. We give it time, especially if we have a nice bullish posture. We'll give it a little extra time. But we have to be clear. What makes it wrong? What makes it wrong? Now, remember, if it goes into period A, that's great. We get to adjust our stop loss. So where I might have had a stop loss, let's move it into pink. I might have had a stop loss here. By the time it goes there, I might move my stop and say, hey, look, I'm at break even. I've taken the risk out of the trade. We're thinking about our first take profit level and when it gets there, taking some profit off the table. Those are the things that we're doing in A. We want to have it automated, which is exactly what we did in our execution. We set it so that it would automatically sell 5 shares. Then we have 20 more shares up here at this level. That's what we're going to be looking for there. Now, if it gets close in this last little range, will I maybe look at a trail stop? Yes, absolutely. The higher it goes, the more I'm going to tighten my stop loss to take risk out of the trade, because eventually it's going to fall back down just like it did here, just like it did here. We know that it will fall back. We know we don't want to give our profits back. So the closer it gets to our target, we're going to tighten our stop. If it gets to our target, we're going to automatically sell. We want order automation as much as possible. We want to have plans for how much we're going to sell, how we're going to sell, how we're going to tighten our stops. These things are perfect for you to be practicing using your paper trade account. Practice cancel and replacing a stop. Cancel and replace, cancel and replace. Change the stop, change the target. watch a video on how to do that. Come into the Trading Foundations. Be like, Scott, how do I cancel and replace? Glenn, how do I cancel and replace? We're here to help you. But this is it, right? You're making this first trade. You're doing all of these things. If you're doing all of these things, you're doing more than 97% of traders already. You have to know you're doing it the right way. Does it feel like it's a lot? Sure. First time you do anything, it feels like a lot. And then less so, and then less so, and then less so. Right? What are we making sure? Yeah, you've got to determine your frequency. You've got to make sure you build it into your routines. You're going to learn and develop what you're monitoring for. But this is all about managing the trade. It's all about adjusting stops, protecting profits. It's about minimizing losses. It's about letting winners run. It's about be water, my friends. You got to make sure you respond to changing market conditions. That's what we're doing when we manage the trade. Okay, so we spent a lot of time in the platform talking about how we're going to manage the trade, establishing our routines, establishing the cadence for how we're going to do this on a regular basis. Now what? Well, like every other now what, like every other next steps, the first thing I want you to do is go finish this video series. Go watch part 6 after the trade. We got to be able to close this down, wrap it up, tie it up with a bow. I want you to think about setting a routine for how you're going to monitor your trades and track their performance. This is all about section 6 and 7, record keeping and analytics. You need one of our trade logs, whether it's the stock log or the option log. It depends on what you're trading. Get into Discord, download whichever one you need, start using it. I want you to practice adjusting stop loss orders. Cancel, replace, put it back on, take it off, put it back on. Raise it up, lower it, right? It's not about putting it there and leaving it in place. It's about making sure you're comfortable doing it quickly, doing it competently. So make sure you know how to place and move those levels. Whether it's to take profit, whether it's to take a loss, whether it's to adjust a stop. We don't want to wait till we need it to learn how to do it. We do it now. Lastly, make sure that you stay adaptive and you respond to changes in the market. If the market starts to change, we change our plan for our trades. That's a big part of what it is that we do as a group. We want to make sure that we are always adapting to change. Very, very important to be water. So with that in mind, woo, you almost made it. One more video to go. I can't wait to see you in the last video. After the trade. Make sure you join me there. And as always, happy trading.